Greg Davies is head of behavioral finance at Barclays Wealth, joins me in the studio now. So, Greg, what is your rationale behind that? Why should one hold back from selling risk assets in an environment where there is just so much uncertainty?
Well, there's uncertainty, certainly, and there's risk. But what else is in the market at the moment is anxiety. And in these times, yes, people need to be compensated for the risk. But what we find is in order to induce people to invest, they also need to be compensated for the short-term anxiety they feel. So that means effectively that the panic in the market drives things lower than would be natural if people were simply pricing in long-term risk. I have no idea whether the market's at the bottom, but I have a very good idea that they're quite a long way from the top. And what we know for long-term performance, the single thing that harms long-term performance the most is when people sell out at the bottom, either because they lack the liquidity to stick with it or because they lack what we might think of as psychological liquidity.
But if they're a long way from the top, then it might be a good idea to do that right now.
It certainly might be a good idea to rebalance, to think about getting in. The trouble is you have to do that with a long-term view, because you might get in now thinking things are good value, and it's quite possible that they will go even lower. If, as a result of that, you panic even more and get out again at the bottom, you haven't done yourself any good. Fundamentally, what you need to be able to do is think, what are my true objectives from investing? And for most investors, these are long-term. So stop trying to predict what's going to happen tomorrow or next week or next month. I don't have a crystal ball, and to be honest, anyone who comes in here telling you they do, you should not believe them. We don't know what's going to happen in the next month. What we know is that in the long term, risky assets earn a premium for taking that risk, and that if we can focus on our long-term objectives, we'll be much likely to be good investors over the course.
But even when you look at the long term, the prospects are not great, are they? Yes, some of the selling is driven by fear, but it's also based on the fundamentals, long-term structural problems to do with deleveraging, to do with unemployment, the European debt crisis, the banks, and the same situation in the US. I could keep on going. So these are long-term problems, aren't they? So how do you balance that and also sort of mitigate the risk from maybe wanting to sell before you see even further declines or in the anticipation of seeing further declines?
So I wouldn't sit here and deny that there are risks. Certainly there are risks, but our position is that the markets are already pricing in those risks and then some. If we take a long-term view of history, we can go back 500 years and more, and we hit things like the South Sea bubble and the tulip bubble. This boom and bust, this rise and fall has happened throughout the course of human history. We have no reason to believe that it will be any different now. And so, yes, things are low. We have a good reason to believe that in the long term, they will earn a reward for taking that risk. And when we start to price in that short-term anxiety premium as well, we've got the fact that markets are acting as a herd. Things are bouncing up and down from one day to the next by 3% or so. There is no way that a 3% daily move is driven by changes in information. This has to be driven by changes in market emotion. And if the market is pricing in that short-term emotion, if we can rise above it, we're almost certainly going to get the benefit of that anxiety premium.
So you've got to be in it for the long term. That for the long-term investor, that argument makes perfect sense. But what if you are a short-term investor?
Well, I would never advise any private client to be a short-term investor. The risk-return trade-off just does not make sense in the short term. The short-term, daily, weekly risks are enormous, and the rewards are there, but they're not outweighed. They don't outweigh the risks.
Okay, good to talk to you. Greg Davies, Director of Barclays Wealth. Thanks very much.